Let's start. The Wednesday watch list whittled down. So I will go through a list of stocks. After each one, you let me know on text whether it's one for the watch list or one to ignore. One other thing. Here's the twist in the tail. I bought one of these at 4:05 today. Okay, let's get into it. Ebiquity, ranked number 20. Okay. Ebiquity, they are engaged in media investment analysis. The company's segments include UK and Ireland, continental Europe, North America, and Asia Pacific. The company provides independent, fact-based advice, enabling brand owners to make media investment decisions and improve business outcomes. It provides analysis and solutions through 4 service lines: media management, media performance, marketing effectiveness, and contract compliance. So essentially, if companies are advertising, they help them with their advertising spend and cut out waste. That's in fact, I saw them on Investor Meet actually today. Have a watch that, right? A little bit watch that. Because the CEO is there, and the lady next to him is the CFO, right? And he's answering questions. Quite a straight-laced guy. And every now and again, one of the questions disappears from the screen, and he mentioned it, and she finds it absolutely hilarious. And I'm thinking, she fancies him. I think she found, because what he was saying wasn't that funny, but she found it absolutely, almost laughing, falling off a chair, hilarious. Oh, I'll answer this next question. Oh, it disappeared again. It's not that funny. Anyway, Ebiquity. Target price, 89 pence. Upside, 106% according to the broker. Market cap, 57. Oh, but the enterprise value, they've got some debt there. 73. Net asset per share, 31. We don't need that. Volume's fine. Revenue, 80 million. Main loss, a small loss, 257,000. Debt of 25 million. Hang on, tell me. Monty, stop it. My son is outside kicking the ball at the wall, trying to get a bit of attention. Sorry. So they are operating cash flow positive and free cash flow positive. No dividend. But 3 most important metrics, they got decent growth, value is questionable, momentum's okay. In fact, it's good. Health should be looked at, efficiency is questionable, potential is good. All right, so pretty much, you see the most important ones here. So these are the results: 7% growth, operating profit. They're all growing compared to last time, and in fact, it's improved since then. You can see, a few more greens on the screen. Value is also getting better. 1.3, EBITDA 14. Price of free cash flow is very high. Health, 15 million of debt. Net debt. Gross gearing, 62, questionable. Current ratio is fine. Gross margin, 90%. And share price momentum is good there. So let's have a look at this. There's some of the figures here. I mean, let's be honest, even in the half year, they did, operating profit 2.3, EBITDA 5. So something's gone awry for the second half of the year. Now, this is the advertising market we're talking about. So we know in a downturn, advertising takes a big hit. The question is the advertising market recovering? If it is, maybe it's going to play. So let's look at the forecast going forward. This is what the brokers reckon. Sort of, I cobbled together some broker targets here, but so top line growth isn't stellar, but they've got some recurring revenue here, and margins are getting better. They're falling through down here to 20%. They reckon they go from literally 4.2 loss to 8.4 profit, and that's growing, and the margins are growing. That's what they reckon. If you can believe that, and the value then gets better. Obviously, going forward, we're talking about EV/EBITDA 4, a PE of 6 or 8. Sorry, 7 pretty much, dropping down. So it's looking like it's some potential upside here. Ebiquity, let's look at the chart. EBQ, it's come a long way, but it is above this 200-day moving average, and it golden cross here. So that's why momentum's scoring high. And I don't know what that was there, but we're sort of breaking above that previous highs here and gapping up today on news. So, ladies and gentlemen of the jury, They sound like a FTSE 100 company. Ebiquity, I reckon you bought these. 107% upside. That is your name on it. Ebiquity, debt too high. Ebiquity, Andrew, no. Mark, no. No, looks to be in long-term decline. Mark, Ebiquity, no, too much debt. Graham, Ebiquity, no. Alan, no. So that's a resounding no. Very interesting. Tim, risky. Ebiquity, no. So sorry. I'll shut this down and get another one. Harish, don't like the debt. No. Well, I'll reveal all at the end. I'll say the ones that are obvious. I mean, that could be contender, couldn't it? It could be.